Welcome back. You're watching First Trades, and let's look at what's happening in the F&O market. The market Nifty trying to hold off to the 24,000 level, and you're seeing a good amount of put action there, and that's what is pushing the market about 24 that level there. The index up nearly 0.71%, and there's a shorts which are getting covered. So yesterday we saw a steep increase in shorts. That some of them are getting covered as the index breached the 21,000 level there. Nifty Bank, look at that index. It's up nearly 1% in today's trade. Open interest up nearly 0.54%, and there's some long positions getting added there. You look at the bank constituents, you'll see that almost every stock in the Nifty Bank is adding long positions at this point in time. Look at what's happening in put and call writing. You are seeing a significant amount of put writing happening at 24,000 level, and if you look at the distribution chart, you will have that at 24,000 at this point in time, the call writers have a higher open interest position, but 23,900 is a very strong, is acting as a good support. So if the activity remains same, we're going to see Nifty maybe crossing the 24,000 and ending about 24,000 at this point, but all depends upon how the market shapes up in the next 2 hours or so. But future gainers include Kalyan Jewellers, where we are seeing short covering happening, 10% up. Swiggy is up 500%, and the stock is up nearly 15% in last few days. Dixon is up 4.8% in today's trade. So long build up happening in both Swiggy and Dixon. In the losers, we've seen some of the stocks like Page Industry, which is down 3.6%. DRL is down 3.5%. Solar Industries is down nearly 2.8%. So all adding some short positions. Open interest gainers in today's trade is DRL adding nearly 9% in open interest. Mazagon Dock is also adding some open interest, in LIC Housing is adding long positions with open interest up nearly 3.7% in today's trade. Among the losers, you have CDSL, where we are seeing a short covering. Amber is seeing a short covering, and Cochin Shipyard is seeing some shorts getting covered after the OFS is over there. But let's look at what's active in the stock options. Kalyan Jewellers 400 July call, 6.39 lakh contracts getting added. As you see, there's a short covering happening with the stock hovering above the 400 mark, 416 to be precise. The premium up nearly 20.25 to 26.8 at this point in time. In the put side, you have TCS, which is very active. TCS 2000 July put, the stock covering just about the 2000 mark, 2025 levels there. Open interest up nearly 1.33 lakh, and the premium up nearly 9 rupees to 56.45. So markets are holding on to the 24,000 level. There is some shorts getting covered in today's market, and from an index point of view, Nifty IT is the one which is down nearly 0.8% today.
Right, and let's move on and let's address what's happening within the EMS stocks as well, because they are the ones in focus after the government exempted select display assembly and wireless charging components as well from basic customs duty until March 2029. Let's try and understand the move and the implications of it. Mithali joins in for more.
Right, so if you see, the EMS sector is buzzing today after the Indian government announced the fresh custom duty exemptions aimed at strengthening the domestic electronics manufacturing. Now, the Ministry of Finance has reduced the basic custom duties to nil on selected imported components such as display assembly as well as the wireless charging modules, with the exemption valid till 31st March 2029. Now, this matters because the lower custom duties will imply lower input costs, better manufacturing economics, as well as potentially stronger margins for domestic electronics manufacturers. Now, more importantly, it could also encourage the global OEMs to deepen their localization and manufacture a large part of their electronics value chain itself in India. Among the listed players, Dixon Technology, which stock is in focus today, could be a key beneficiary because given its scale, smartphones as well as the consumer electronics manufacturing. Amber Enterprises could also benefit as it builds an integrated electronics manufacturing platform and also expands its presence in the smartphone ecosystem. Moving now to Kaynes Technology, it may benefit through its exposure to automotive as well as the industrial electronics, while PG Electroplast, it continues to scale up its electronics manufacturing operations. Also, Surmise GS and Avalon Technologies, they could be the indirect beneficiaries of the broader localization opportunity. So the key takeaway of all of this is that lower input cost, improving manufacturing economics as well as the deeper localization, they all seem to be structurally positive for the India's EMS sector.
Very much for that update on EMS. So the incentives coming in for the Indian companies there by Ministry of Finance. But moving on to DRL, the stock is under pressure, down nearly 2.4% to 1316. Dr. Reddy's has flagged a delay in semaglutide supplies due to an API quality issue. The company clarified that there is no impact on patient safety and existing regulatory approvals remain unaffected, while corrective measures are underway to restore supplies. Meryl joins us with the details.
That's right. We're seeing DRL stock under pressure in today's trade after the company's flagged a delay in the supplies of its semaglutide due to an API quality issue. Now, this delay could very well be seen weighing on the company's near-term semaglutide business. Just as a recap, the company already has approvals in place in both India as well as Canada. In India, it's got approvals in place for a pill format as well as an injectable format. While in Canada, after the approvals, Dr. Reddy's actually was the very first company to get semaglutide generics approvals in a regulated market in Canada, and it is one of the top 3 players in this market. Alongside this, it's also got supply agreements in place with Sandoz as well as